Hello, Finamisers. Welcome to another Finamise Live. My name's Russell, a global markets analyst here at Finamise. And I'm happy to host today's event on the rise of cryptocurrency in 2025 with our partner, Morpher. First, we have some housekeeping to run through. As you're coming in, please answer the two polls that will pop up on your screen so we can get to know you better. Feel free to introduce yourself in the chat, tell us where you're tuning in from, and remember to switch to all attendees so everyone can see your messages. This is going to be a 15-minute discussion followed by a 15-minute audience Q&A. Please use the Q&A box to ask a question. And if you see a question you like, upvote it so it moves to the top. That way we can get through the most upvoted questions first. Okay, so let's kick this off. Morpher is on a mission to democratize trading around the world. They offer a diverse range of investment opportunities across various markets, including stocks, cryptocurrencies, commodities, indices, forex, and even unique markets like NFTs and luxury watches to create a diversified portfolio. You can find your trading edge in Morpher's one-stop shop trading platform. Today, I'm excited to have Martin Froehler, co-founder and chief executive officer of Morpher. He's a mathematician, veteran quant, former hedge fund manager, and having spent over a decade in quantitative finance, Martin experienced the numerous inefficiencies of the financial industry firsthand. Realizing the industry consists almost entirely of middlemen who charge obscene fees for bad service, he embarks on a mission to fix finance. Martin, great to have you here today. How are you doing today?
Thanks for having me. I'm doing great. Thank you.
Excellent. So let's dive in. So what's your take on the biggest trends shaping the crypto market right now?
Yeah, so actually crypto is very exciting again after a lull in the last couple of years. The biggest trends at the moment, I would say, the clearest biggest trend is adoption, institutional adoption. So about a year ago, Bitcoin, especially Bitcoin, made the big step to being accepted as an asset behind an ETF in the United States. And that really was crossing a chasm into mainstream finance with Bitcoin. So Bitcoin became accepted as an asset, and actually crypto, by extension, became accepted in traditional finance or TradFi as an asset class, as a whole new asset class. And it is also a very appealing asset class to a lot of investors, traditional investors, because it typically is not very correlated, not highly correlated with other assets such as stocks or bonds. So it's a new asset class that can potentially help to diversify existing portfolios because it comes with historically at least high returns and historically low correlations to traditional assets. And that's exactly what every portfolio manager wants, right? So an asset that is not correlated but produces returns. So the biggest trend at the moment is institutional adoption. And it doesn't just stop with institutions like companies putting Bitcoin in their treasury or pension funds putting Bitcoin in their basket of assets. But it's in the meantime, at the moment, already nation states that are allocating towards Bitcoin.
That's an interesting time. So Bitcoin's dominated for years. Do you think it will always stay on top, or could we see another crypto take the lead?
It's always hard to tell, but given the situation right now, I'd say it's very hard to imagine that there is any crypto asset coming up in the next decade that could really challenge Bitcoin's spot. Bitcoin is special. There is Bitcoin, and then there is the rest of crypto. Bitcoin is special in a sense that it has carved out a niche. It has a very clear use case, and it is very easily understood by traditional finance, by traditional investors, as digital gold, basically. So as a digital version of gold, as a store of value. So Bitcoin does only one thing, and it doesn't attempt to do anything else but storing value. And it is very good at doing this because it is very secure. It is, since it's very decentralized, anyone can run a Bitcoin miner. And it's operating on a global scale, Bitcoin mining basically, and secured by energy. That means by a lot of power. So it is very hard for even a nation state to attack the Bitcoin network, to censor transactions or to roll back the blockchain or something like that. So it is very hard to attack. It is immutable. And that's why, because of these properties, it will be very hard to replace Bitcoin. It is very safe, the safest asset in crypto. And then, of course, there's the rest of crypto. And you can think of this as like the dot-com era where internet companies popped up left and right. And this is what we're going through now with crypto at the moment. So a lot of experimentation is going on, a lot of new blockchains emerge. And yeah, maybe one of them will emerge as the digital oil. At the moment, it looks like Ethereum is going to fill that role, but up for debate, and the future will show. But to get back to your question, Bitcoin will probably keep its dominant spot in the whole of crypto throughout the next decade at least.
Okay, thanks for that. So why don't we talk about Ethereum just for a minute, because you brought it up in your topic there. It's obviously taken a little bit of a hit this year. Do you want to talk a bit about what's driving that and what should investors be thinking about?
Yeah, so Ethereum is the biggest altcoin, the biggest alternative blockchain, if you will. So biggest blockchain other than Bitcoin. And Ethereum can be used to launch crypto-based businesses, such as, for example, ours. So Morpher is also such a crypto-based business. We have used the Ethereum blockchain as an infrastructure layer, basically, to build our trading platform on top of it. And in the case of Morpher, that means you can trade any asset via its virtual representation. So we recreate real world assets like stocks or commodities or cryptos on the blockchain, on the Ethereum blockchain, and make them freely available to everyone for trading without intermediaries, so without brokers, without banks, without exchanges. And that is powered by Ethereum, by the protocol Ethereum. So you can think of Ethereum as the digital oil towards, if you want to compare it with Bitcoin, the digital gold. But of course, an economy may thrive on oil, or it may use gas, or it may use coal, and that's pretty analogous to how a digital economy may either use Ethereum, or it may use Solana, or it may use Ripple, or any other of the blockchains that emerge. And basically, what will determine the outcome of that race, nobody knows at this stage. Ethereum still has great network effects, but you're right, Ethereum took a hit recently. And the primary reason for that is that there is currently no narrative that would drive adoption of Ethereum. So Ethereum had a narrative back in 2017 for the first time with the initial coin offerings. A lot of new crypto startups were building on Ethereum and launching their own token. That was a narrative. Then later it had decentralized finance. We had the summer of DeFi, as it is called, where a lot of protocols emerged that would allow you to lend against your crypto holdings and extract stable coins, borrowing and lending, so to say. Later, we had NFTs, so non-fungible tokens that would represent some kind of an ownership right on the blockchain and make this ownership right transferable in a digital way, trustless. So Ethereum always had a narrative, and there were always new experiments emerging, and Ethereum was always the first blockchain to capture that narrative. At the moment, the next upcoming narrative is probably stablecoins, but we are still in the early innings of that. So we will see. But I would say it's too early to say that Ethereum has failed. Yeah.
Say that, I just said it had dropped in price. Regulation's a hot topic right now. How do you see US policy changes impacting the crypto market sort of over the next 12 to 24 months?
I think that's very positive for the entire space. So the US is clearly the most important financial market globally, and a lot of other countries look to the US when it comes to regulation. And we had a 180 degrees shift now with the new administration. The previous administration was openly hostile towards crypto and was trying to rein it in, and was refusing to give the crypto industry, to give the space clear rules, clear laws that crypto companies could follow. And that is a problem. That is a problem for the entire space. So that was also one of the reasons why we, as we are basically a US company with Morpher, but we also chose to move out of the US and to not accept US customers. and to build it in Europe, because in Europe we have clearer rules, and in the US they were simply not there. So you didn't know whether or not what you do is actually compliant with existing laws and regulations. You would only know once a regulator came in and sue you that you have apparently overstepped a law or an interpretation of a law as per the regulator. So, and that has shifted now 180 degrees. So the new administration actually embraces crypto. It sees the potential that crypto can have for the United States as an economy, and also for the continued dominance of the US dollar in global finance. And they are set to create clear rules, laws, and regulations. And this is the most important thing as an entrepreneur. You need to know what the rules are so that you can follow them. And this is going to happen in the United States now. And it even goes beyond that. So in the United States, the administration is so pro-crypto at this point that it even considers to actively invest in crypto or in Bitcoin specifically, and use it as a reserve asset as they have used gold in the past and right now.
Okay, that's good. Thanks. And if you were a retail investor today, what's the smartest move you'd make next?
That's a good question. We deal a lot with retail investors on Morpher, almost exclusively. So we are actually built for retail investors. The advice that I would give everyone is two pieces of advice, actually. So the first one is, if you believe in the value that crypto can bring to the world, such as I do, then the best way to enter into the space is by dollar cost averaging into the biggest crypto protocols out there, primarily Bitcoin. If you want to move a little bit further out the risk curve, then you could do it with Ethereum as well, with maybe Solana or other layer one blockchains that are currently in high demand. So with the biggest by market cap. Dollar cost averaging means that you just whatever it is you want to save, you put in every month or every week or whatever pace you want to choose. You put in the same amount regardless of what the price of the assets that you want to purchase is. So let's say you want to invest £100 every week and build up a Bitcoin position over time. Then you would just purchase every week £100 worth of Bitcoin, regardless of what the price of Bitcoin is. And over time, you will build up a sizable position of Bitcoin, and spreading it out over time means that you will never be entirely right. So you will never pick the bottom of the price bottom, but you will also never be entirely wrong. So you will also not be one of the unlucky investors who buys the top and then has to wait for a couple of years for it to come back. So over time, you can build with that simple strategy a very meaningful crypto position. And there is no investor in the world historically who has invested in Bitcoin and waited for more than 4 years and has made a loss with their investment. So historically, this has been a very good and smart strategy. The second advice that I can give everyone is learn how to trade. Trading is a life skill, a skill that is necessary, especially in times like this, where inflation eats up everything that you're keeping in bonds or in your bank account. It is actually necessary nowadays to make at least a return of, say, 7 to 10% to outpace inflation, and to not just to preserve your purchasing power, but to actually increase it over time. And I can only recommend anyone build one large portfolio that you consider to be your investment portfolio, where you dollar cost average into an asset such as Bitcoin, and then start to learn trading, because this can really give you a separate income stream that is even more profitable than just dollar cost averaging into an asset like Bitcoin. And I believe that we have a great offering with that on Morpher, where you can trade stocks, commodities, cryptos, forex markets, and even luxury collectibles with very low risk. So all your risk is whatever you put in one position, and you can never lose more than what you put in. And you can even experiment and learn how to use leverage, how to short the market, so how to benefit when markets are falling in price, and all of these things in a very safe environment. So yeah, this is what I would recommend, and you only learn trading by doing.
Good advice there, thanks. Okay, so it's time to turn this over to all of you tuning in. So what questions do you have from Martin? Please put them into the chat and don't forget to upvote the questions you're interested in hearing about. So let's start off with the top one, which you can hopefully see there yourself. Why no adoption of Morpher in the mainstream crypto world, even though it's been 5 years since Morpher launched?
Regarding Morpher, the adoption of Morpher in the crypto world is we are not focusing on the crypto world, and we actually see good adoption in the retail space. Crypto is for us just a tool through which we can make possible what Morpher solves for the customers. And the big pain point that we solve is access to all markets on one platform. We can let people from Africa, from Latin America, from Southeast Asia trade and learn how to trade with just $10. So our mission is like really to teach or to allow everyone to learn trading and investing. That is, and to democratize access to the markets. And yeah, we have over 50,000 users on the platform currently and grow at a decent pace. So I'm actually kind of happy with our progress.
Now, there's a question here, the next one about correlation. You mentioned about sort of less correlation with traditional markets and crypto, but right now and whenever there's uncertainty and fear, both traditional and crypto seem to sort of tank at the same time. Or do you mean more that crypto can sort of hit a bull run without a similar one in traditional markets?
Yeah, that's a very good point. So at the moment, unfortunately, the correlation, the short-term correlation of crypto to the stock markets is relatively high. One big driver behind that is global liquidity. So we had a reduction of global liquidity. We had tightening by important central banks, also like the Fed, the Federal Reserve. And that is always bad. That is a macroeconomic headwind for the Nasdaq, the stock market, so tech stocks, and also cryptos. The primary reason why that is the case is because of the participants in both markets. They overlap now. So BlackRock's launch of the ETF brought in a lot of traditional investors, and they still perceive Bitcoin and crypto as a risk asset. However, these investors are only a tiny portion of all the crypto investors, and especially in the case of Bitcoin, there is much more to it. So that the long-term low correlation to the markets can be expected to hold. Typically, correlations are very robust, and I don't expect that to change anytime soon with crypto. But there are phases where, and this is right now the case, that is correct, where crypto correlates with risk assets. And there is also phases where crypto is negatively correlated with risk assets. And I think we will see that in the latter half of this year.
Thanks. Then the next one up, do you think that the US, UAE, or somewhere else will be the home of crypto, sort of with all the investments and commitments that you see going on?
Yeah, definitely. So if the US actually comes through with what they have planned, if they actually implement, for example, the strategic Bitcoin reserve that Senator Lummis is proposing, or also if the administration finds ways to acquire Bitcoin in a budget neutral way, as they have set out to do, and I'm very confident that they will, then yes, it is very likely that the US really can position itself as the global capital of crypto and blockchain, simply given their economic power and also given game theory among nation states. Because if the US publicly doubles down on crypto and on Bitcoin and considers it to be a reserve asset, that forces everyone else on the planet more or less to at least have a plan about crypto. And that forces strategic rivals of the United States to also make a bet. And that bet can, of course, be, okay, crypto will go away in 5 years, or we need a piece of the pie too. And that's game theory among nation states. So this will be very positive.
Very good. The next one, it's got two questions, but we've answered the second one about correlation. So I'm just going to stick to the first part of the question about diversifying investments. Would you recommend buying both gold and Bitcoin, or sort of just one, or just Bitcoin, or digital gold?
Bitcoin is the safest bet. I can recommend anyone build up a Bitcoin position. Most people don't realize how scarce Bitcoin is. There are 20 million Bitcoins ever only hard coded, so there will never be more. And there are about 70 million millionaires on the planet. So even if every millionaire would want a Bitcoin, they couldn't have it. They couldn't have more than a third of a Bitcoin. So Bitcoin is super scarce. And if you share the thesis that this will become a reserve asset and the backbone of future financial systems, then I can recommend Bitcoin. If you are comfortable with taking a little more risk, while also potentially, of course, having higher rewards, then you can move out the risk curve and consider assets like Ethereum. Ethereum is still by all metrics as a network, the second largest network. And there is no challenger in sight, in my opinion, that could overtake Ethereum anytime soon. And Ethereum is currently in a drawdown, so I would say it's a pretty sweet spot to strategically add to Ethereum. But if we look ahead 20 years into the future, if I were to preserve my purchasing power for retirement, or if I want to pass something on to my children, then I would choose Bitcoin over any other crypto.
Perfect, that's clear, thanks. Next, what's the roadmap for Morpher for the coming 5 years?
Yeah, so at the moment we are very focused on the launch in the US, and we're excited about that because of the change in a regulatory in the regulation environment in the whole situation. We can now actively accept users, customers from the United States, and this is going to be a very relevant market for us. Furthermore, we want to double down on our mission to empower people to learn trading. So you will see a lot more content from us where we have seminars, courses to teach even kids already trading, because I feel that this is like really missing as a piece of a very important education in school, a very important piece of the education. And you will see much more of that. So we will double down on our mission to open access to trading and investing and to educate even very young people and to teach them how to trade.
Okay, good. There's a couple of questions here, and I think so. Do you believe, I think you do believe the current US government with the initiatives because of the regulatory sort of side, but about all these pumping of the meme coins, yeah. Do you have any views on that, or it's,
Yeah, that's an unfortunate side effect. Let me put it this way. It's now more or less the Wild West of meme coins, not just in the United States, but the United States recently opened up to that. And even the president launched his own meme coin. As a long-term store of value, I would not recommend anyone to hold any meme coin. A meme coin, by very definition, is just based on people find it funny, yeah, on a meme, and that changes over time. New memes pop up every day, like in the thousands, and only very, very few make it. However, it is, of course, a market that can be very exciting to trade. So it is a market with very high volatility, meme coins. And once you have learned trading and once you have mastered the basic skills of risk management, and you're no longer inclined to all in on the latest meme coin, then it can be a very lucrative market, but only for active traders who are rather experienced already.
Okay, that's good. There's a lot of questions sort of coming through here, so it's apologies if I don't answer your question. There's one here that I'm just going to ask because it had 3 upvotes. Is regulating crypto an oxymoron? I'm not quite sure how you want to go about that or not.
Yeah, no, that's also a very good question. To some extent, it is. What can be regulated, though, are the gateways between crypto and the traditional financial world. You cannot regulate a crypto transaction per se. You can send anyone Bitcoin wherever they are in the world, as long as you know their address. So this is permissionless. And that's good. That's actually the feature behind crypto, or one of the features. However, what regulators can, of course, set is, law of the land rules of how crypto is supposed to interact with traditional finance. And this is what we see in Europe and in the UK, and what we will see in the US probably soon, that regulators define how the gateways, so the crypto exchanges, can accept customers, can let them purchase crypto. So basically, they control the gateways between traditional finance and crypto. And that's fair. Also, for example, for stable coins, this is something I think that is very desirable, that stable coins actually should follow certain rules about their reserves, should have transparency with their reserves, and maybe from time to time pass an audit so that people can really trust the stability of the stable coins. So these are good things. Yeah. And crypto per se, once you're in the crypto world, of course, it is permissionless, and that's not a bug, that's a feature.
Good answer. Thanks for that. You've touched on a bit of this about the recent sell-off, but the crypto market overall hasn't picked up as much since the recent dip following the trade tariff talk and growth scare. Do you want to give a bit more color sort of on that, on the sell-off and the lack of the bounce so far?
Yeah, I honestly just expect this to be temporary. No investment advice here. Yeah, dollar cost average in if you want to build up a crypto position. But I expect this to be temporary. Crypto was facing a rally or had a good rally after the new administration came in. So after Trump was elected president, because people were relieved that now somebody who is more friendly to crypto and to the industry is becoming president in the United States and brings in a crypto-friendly administration. And then that enthusiasm cooled a bit off because we always tend to overestimate the impact of something in the short run and underestimate the impact of events in the long run. And this has been true again here. So the euphoria, the post-election euphoria in the crypto space cooled a bit off. What is an additional maybe roadblock currently is it is tax season in the US. So investors who had realized gains in the last year now might have to sell some assets to pay their taxes. That's always happening at that time of the year. And then the third headwind is macroeconomics. So as mentioned already previously, the Federal Reserve and other central banks were tightening their balance sheets. So this is usually an environment in which risk assets, and Bitcoin is still perceived as a risk asset at the moment, tend to underperform. I expect this to change though.
Coming towards the end, I've got one more question, maybe two, and one here that I think it's what's a good and safe platform to start trading and invest? And I thought maybe you may want to mention what you were talking before the call about, something like that related.
Yeah, so for learning how to trade and invest, I can recommend Morpher, and anyone who signs up here within the next 12 hours, you can find the link to the sign up page in the chat at the top of the chat. Anyone who signs up will get a free 1,000 Morpher token from us. That's roughly $11. And you can just play around with it. So you don't even have to risk your own money. You can learn how to trade, how to build a portfolio out of over 1,000 investable assets on our platform. You can learn what it means to trade a position with leverage. And you can learn what it means to trade a position short, so to speculate on falling prices. So I can only recommend learning by doing. This is like really the only way how to become a great trader over time, and don't expect success overnight. Good platforms for the first strategy, so for like really building up a Bitcoin portfolio or an Ethereum portfolio over time. I personally like the Kraken exchange. It is a very safe and very old crypto exchange for the crypto space. But of course, you can also do Coinbase or Gemini. There is Bitpanda here in Austria. There's a lot of platforms.
Martin, I'm just going to have to interrupt you there because we're coming to the end of the time. It's all we have time for, so thank you so much. Please, as you leave the event today, a pop-up survey will appear on your screen. Please take a few minutes to let us know which topics you're interested in hearing about future events. Thanks very much for joining us, and I look forward to seeing you at another event sort of soon. Thanks very much, Martin. Thanks all.
Thanks for having me, and have a nice evening, everyone. Thank you.
Cool. Thanks.